Hello, this is Julius from Basic Financials. This is going to be a second part of my bookkeeping, double entry bookkeeping. In my first video on bookkeeping, I just did a very basic, just basically like a cash book, money coming in and out of the bank. Today I want to introduce customers and suppliers into the mix. So now, if you do actually give credit to people, so you might sell something, but you'll say, well, you don't need to pay me the cash straight away. I'll give you 30 days to pay. You're going to end up with customer balances, and you're going to want to keep a track of those customer balances. You want to know what you've sold and how much each customer owes you. So let's say you've got a customer A, and you sell him or her, say, £12,000 worth of equipment or goods, whatever you're selling. Now, in this particular example, remember I was saying that you've got a debit and a credit for your each transaction. So you've made a sale of £12,000. That's going to be, it's a sale to customer A. So customer A is going to have a debit of £12,000 on their ledger. Remember I also mentioned about T accounts. So it's going to go on the left hand side. It's a debit, £12,000. And the credit, we're going to ignore VAT here for now. The credit is going to be £12,000 from sales. So the credit, so you've got 12,000 debit. So you can see that customer A owes you £12,000, and it's a sale. So if you were to look at your profit and loss and balance sheet at this point, you would have trade debtors, which is customer balances. Customer A would be owing you £12,000 on the debit side, and then your other side of your accounts would be in your profit and loss account. You would have sales, £12,000, and you'd say your balance sheet would be an asset, the money owed to you of £12,000, represented by the profits to date of £12,000, and your profit and loss account would show sales £12,000, no expenses, profit of £12,000. So again, everything's balancing there. So now that customer pays you £12,000. So the debit here is the money is going to go into the bank. So you're debiting your bank with £12,000. And where's it coming from? Well, it's coming from customer A. So you will put an entry in that T account of your customer A, £12,000. That £12,000 going into the credit of the customer A will clear it. So you've got a debit of £12,000 where you made that sale, and then £12,000 where it's coming from the bank. So it's now zero, which is what you want. So you've got no trade debtors, no customer balances. Customer A doesn't owe you anything anymore, and instead you've got £12,000 sitting in the bank. So your balance sheet now will show, instead of 12,000 customer balances, it will show an asset of 12,000 bank balance. Nothing's changed on the profit and loss account, so your profit to date is still £12,000, and your profit and loss account hasn't changed. Sales 12,000, no expenses, 12,000 profit. So everything still balances. You just had a bit of a change in the mix of the money and the assets. Now it's let's introduce VAT into this situation. It will show a little bit more with the full accounting. Okay, so let's say this £12,000. You're now registered for VAT, say. Now, going back to the original part, so you make a sale of £10,000 plus VAT of £2,000. So that £12,000 would still go to customer A's debit side of their T account. But this time, £10,000 is what you've sold. So you'll have £10,000 going to the credit of sales, but £2,000 of it is VAT, and you owe that to the VAT man. So £2,000 will go to your VAT account, or you could be splitting it between VAT on sales and VAT on purchases, which is what often happens. So we'll say VAT on sales, you'll have £2,000 credit on your T account of VAT on sales. So just to recap on that, I know it seems a bit slow, but I'm going to say it so you can hear it all again. You might want to write it down on a piece of paper. Customer A, T account. Remember the line down there going across, T. On the left-hand side, debit, you've got customer A, £12,000. And sales, T account, you've got £10,000 on the right-hand side as a credit. That's where it's come from. And the VAT on sales T account on a credit entry, you've got £2,000. So your debits and your credits add up. You've got a debit of 12,000, a credit of 10, and a credit of 2. So your debits and your credits are still adding up. Your balance sheet now will actually show £12,000 still in assets because the customer owes you £12,000. But this time you're going to have a liability, and that's going to be what you owe the VAT man. So your VAT account will show a credit of £2,000. So you've actually got net assets of £10,000, and that's represented by your profit and loss account of £10,000. Remember, your profit and loss account now will show sales of £10,000, not £12,000, because £2,000 of it was the VAT man's because you're registered for VAT. So your profit and loss account will show sales of £10,000, no expenses, and therefore you've got a profit of £10,000. Yeah, I think we'll leave it at that. That was fairly straightforward, but just introducing a little bit extra of that double entry and how it all flows through to the profit and loss and the balance sheet. Hope that helps. Give me any comments, like and subscribe as usual, and I'll see you again soon.